Now, let me introduce Susie. Susie Sheridan. Since 1991, Susie has been keeping the books, facilitating adventures, and generally keeping the lives of her clients organized. Today, she lives in northern Minnesota. Oh my goodness, you're basically in the Antarctic today, right? Yeah.
Yeah.
So good thing you work from home. And she works from home at her computer, helping others conquer their tedious tasks so they too can lead productive, happy lives. And you guys, those of you who had the fortune of being at our live event in 2018, we all got to meet Susie and know her in person, and she's just got such a dry sense of humor and is so knowledgeable on this. And I thank you, Susie, for being willing to create this for us. So I'm going to mute everybody, including myself. Then I will unmute you, Susie. Susie, you should be unmuted, yeah, and I'm going to turn it over to you now. Thank you so much.
Thank you. Welcome. This is Essential Bookkeeping for Virtual Experts, what every virtual expert needs to know to create a basic bookkeeping system. Before I get started, please check that you have the two handouts that you'll need during the presentation. There's a Schedule C and a worksheet that I created that we'll be working on later in the presentation. Today we have 4 goals. Realize the importance of good bookkeeping, identify what you need to keep track of and the tools you're going to use to do it, apply the new bookkeeping system to your business, and use the results of the bookkeeping system to create reports to help you evaluate your success and plan for the future. Bookkeeping is simply a method of keeping track of financial transactions. Here's Wikipedia's definition. Bookkeeping is the recording of financial transactions and is part of the process of accounting in business. Transactions include purchases, sales, receipts, and payments by an individual person, organization, or corporation. So basically, every time you do something that involves money, you need to record it somehow. It doesn't matter how you record it, except that it needs to be in a way that's useful to you. There are endless bookkeeping methods, systems, and tools to help you do this. From paper bookkeeping systems to complex software programs to professionals who will do it for you. The bookkeeping system you choose, develop, or create depends on your style and needs and how much time, effort, and money you want to spend. So why do you need to know about bookkeeping? Do any of these sound familiar? You're just starting your business and you can't figure out why you never have any money. Having a good bookkeeping system would help you see where your money is going. You have been in business for a while but don't seem to be getting ahead on your bills. A good bookkeeping system will help you figure out where the problems are. You have dreams of branching out but can't seem to make it happen. A good bookkeeping system would help you plan. You dread getting ready for tax season. A good bookkeeping system will have the majority of the work done as you go. You're in a panic due to an upcoming audit and the necessity to get your shoebox organized. A good bookkeeping system would have prevented this and would have pre-positioned you in a prepared state. The bottom line is that a good bookkeeping system is necessary for 2 main reasons: planning and taxes. A good bookkeeping system will help you keep track of income and expenses so you can tell whether you are making a profit. Profit is, by definition, the difference between your income and your expenses. So, the first logical thing to do is to keep track of them. A good bookkeeping system will provide the data necessary to monitor the success of your business and plan for the growth of your business. Regularly running reports from a well-kept set of records will keep you abreast of the state of your business, allowing you to see exactly what's going on. Finally, a good bookkeeping system will provide evidence that you are running a successful business and that you are serious about your business, which will help you get business loans and pass tax audits. Taxes are unavoidable, but a good bookkeeping system will enable you to plan your estimated tax payments and avoid penalties, make it easier to file your taxes and meet your legal obligations, and simplify the process and improve your results if you ever do get audited. There is no requirement to keep track in a specific way. Your bookkeeping system can be as simple as a spreadsheet and a file box, as extensive as an expensive accounting software and scanning equipment, or any combination in between. It's up to you and what applies best in your situation. The key is to keep track. You need a record of all your income and expenses. These income and expenses need to be categorized in a useful way so that reports can be generated to tell you what's going on. And you need a filing system, whether physical or electronic, or a combination of both, so that you can retrieve the evidence in the form of receipts, invoices, canceled checks, bank and credit card statements, and copies of client checks, and then be able to provide them to tax authorities, potential lenders, or even potential buyers.
So, Susie, thanks for sharing all that. And so how do we get started?
The simplest way to get started is to pull out your latest tax return. Find a page that relates to your business. If you're in the U.S., you will want to look at your Schedule C, Profit or Loss from Business. If you're an S corporation, you'll use a Form 1120-S, which is very similar. If you haven't yet filed the tax return for your business, you're just getting started, that's okay. Just go online and get a blank copy of the Schedule C. You'll see in this Schedule C, under Part 1 and Part 2, Income and Expenses, some categories that the IRS considers the most common. So the simplest way to get started is to use these categories. You will eventually want to fine-tune them so that you can keep track of exactly what is important to you. Here are the categories that the IRS feels are the most common and the ones I think are most appropriate for a virtual expert. Again, on the Schedule C, we have under Income, gross receipts. For a virtual expert, this will most likely be in the form of fees received. You will want to break them down into categories based on what types of services you provide. For instance, social networking, bookkeeping, scheduling, website maintenance, and customer service. For the IRS, you just add these all up and insert the total in the Schedule C. Other income. For a virtual expert, this will most likely be for interest earned on business-only accounts like your checking account and for finance charges received from clients who pay late or on a schedule. You might also use it for affiliate fees that you receive. And now, expenses. Again, as listed on Schedule C. Advertising. This will be for both print and electronic, so you could include your website. Car and truck expenses. If you keep track of personal and business use of your vehicle, you can deduct the business use. Commissions and fees. This is for commissions you pay and other fees paid. I use this for fees I pay to PayPal and Stripe to process credit card payments. You might also use it for affiliate fees that you pay. Contract labor. Here's where the IRS expects you to include any subcontracting virtual experts that you do not treat as employees. Depreciation and Schedule 179 expenses. For virtual experts, this is most likely going to be business furniture, computers, and audio-video equipment. Section 179 allows you to deduct a certain amount all at once rather than depreciate it. Don't worry, you can find a link to the information on depreciation in the IRS publication section of the resource handout that you'll find after the class. Next is employee benefit programs. Use this category to keep track of any benefits you pay to your employees, not including wages or pension or profit sharing plans. Insurance, other than health. Use this category to keep track of any business-related insurance you may have, like insurance for the replacement of your cell phone, renter's insurance on the office space, and identity protection insurance. Note that if you are deducting a vehicle for business purposes, you don't include that here, so you will need a separate category for auto insurance. Interest, mortgage. If you claim your home office as an expense, you can usually include a portion of your home mortgage expense, so you want to keep track of that. Interest, other. This is for interest you are paying on credit cards, which you're not doing, right? Or other loans, for instance, if you buy your office furniture on credit. Legal and professional services. Use this to keep track of fees you paid to accountants and attorneys that are related to your business. You could also use this if you paid a fee to have your website designed, or if you are paying a monthly fee to have it maintained. Office expense. This is for office supplies and postage. You may want to subcategorize it to best suit your needs. Pension and profit sharing plans. If you have employees and make contributions to any kind of pension or profit sharing plan, keep track of that here. Again, you may want to subcategorize it if you have a complicated plan in place. This probably doesn't apply to most of us. Rent or lease, other business property. This probably doesn't apply to many of us, but you could be renting or leasing your credit card processing equipment or office or storage space, so that would go here. Repairs and maintenance. Use this if you have to send your laptop or your office chair in for repairs or have a maintenance agreement with a company for your desktop computer. Supplies. This is meant for materials that you keep on hand related to products you sell. For instance, if you create brochures for your clients, supplies would include the special paper and ink that you use. Taxes and licenses. This is for state taxes paid, not including sales tax, personal property taxes on business assets, license and regulatory fees paid to state and local governments, employee-related taxes paid for Social Security, Medicare, and state and federal unemployment taxes. Travel and meals. Travel. That's the way they've subcategorized it. This is to keep track of transportation and lodging expenses for business-related travel, which is tracked separately from meals. Travel and meals, deductible meals. Here's where you keep track of meals and business-related entertainment receipts. And then utilities. This is for any additional phone lines you may have or other utilities expenses related only to your business. Wages. This is for wages paid to employees. Employee wages, not your own wages. Other expenses. You'll probably have some expenses that you can't fit into one of the IRS categories, so you just keep track of them here. Here's a tip. It's not crucial for tax purposes whether you get the expense in the right category because they will just be added up together. It's more important that they are categorized in a way that is meaningful to you. I should probably say too, I'm not an accountant, so this is my experience where I would put things. If you have a question or anything, you would want to ask an accountant too, because I'm not an accountant, I'm a bookkeeper, so.
Good disclaimer, Susie. And Susie, when we were talking about this, didn't you say that it's not as important where they go, but that you get them somewhere and you know your own system?
Right. Because each of these, so they're just all going to be added up and they all get treated the same. Well, the depreciation gets calculated separately, but so they're just going to all get added up. And as long as you don't put them into categories that don't apply to you, like depletion. Depletion is for mining companies. so don't put anything under depletion, you know. But other than that, as long as you get it close to the right place. I mean, I suppose if you put something in the wrong place, like if you had everything under other, then the IRS would want to know more details about it, you know?
Yeah, don't put everything under other. Don't do that.
Yeah.
So I have a question for you. I really do think that's a lot of categories. I mean, so can you show us an example of how to use them?
Sure. I'll show you the income and expense categories that I have set up in my bookkeeping system. I use Quicken, home and business, and rental property. I'm a virtual expert, but I also have other sources of income. I'm a property manager, and occasionally I do some carpentry and sell the results. So my categories for income include 10 different categories. These images all came from my Quicken software, showing my income and expense categories. So for income, I use bookkeeping, carpentry, cleaning, facilitation, furniture, general labor, horse care, property manager, virtual expert, and word processing. For my expenses, I use advertising and website, bank charges, depreciable equipment. Depreciable equipment is usually my laptop. Insurance, legal and professional services, memberships, office expenses, which I've just divided into 3 categories: hardware, software, and postage. And so these would be all less than year-long usable items, or things that are less than $100 or $200, so they don't need to be depreciated. Repairs and maintenance, subscriptions, supplies, telephone, travel, and utilities. So I do claim my home office as a business expense, so I also have to keep track of household expenses that can be allocated to the office, which is mostly rent and utilities in my case. For income, I also keep track of which client it came from, so I use a feature called a tag in my Quicken software for that. Now, you might have expenses that you're planning to bill to clients, so you'd want to keep track of these as well, either with a separate category or with a subcategory including the client name.
Robin asked, where do I record what I pay a team member?
A team member. Is that somebody who is a subcontractor to you?
Yes.
So that would be contract labor. Number
Okay.
11 under expenses.
And Sharon asked, where would you put software you paid for, like Canva, MS Office, and things like that?
That depends on the lifetime. If it's only good for a year, you can just count it as an expense, office expense. If it's good for more than a year, then you might have to depreciate it and count it in depreciation. Most stuff is a yearly thing, so you can usually just count it under office expenses. And if you have to do a lot of that, like if you have a lot of companies like that that you use because you do some certain service, you might have a subcategory of office expense so that you know that you are paying how much for a combination of those services. Because office expense is kind of a broad category. So you might want to make a subcategory called online apps or online services or some kind of tools that you use, software tools.
Let's see. Yeah, nobody else has any other questions.
I did want to have you do a short assignment. So
yeah, let's
take
do
a look
the assignment.
At the Schedule C that I've provided, or you could pull out your actual tax forms and figure out your categories. You can jot them down on the worksheet I've provided, and then try to break your income up into subcategories based on the services you provide, and also think of useful categories to divide office expenses into, or other categories that the IRS didn't think of.
You can make your own up. You don't even have to go by what they've got in there. You can make them up.
Yeah.
So does anybody have any questions on how to do this exercise that Susie is asking you guys to do? And Susie, how many minutes are we going to give them to do this?
I don't think it would take very long because we already answered a bunch of questions and spent quite a while on that. So maybe 5 minutes.
All right. So Marie is asking, the expense of training / education can be listed as a business expense as well, correct?
Yes. If it's training you or keeping you educated on your current responsibilities and things. If it's something new, then no, it can't. If you're learning how to do something totally different and new that's totally unrelated, then it doesn't count as a business expense.
If it's totally unrelated to what? Your business?
Your business and what you're doing. Yeah. If it's a whole new aspect, then it's...
So let me ask this. What if it's a brand new virtual assistant and this, you know, she takes my training program? I always thought that would go under business expense.
This is where you want to ask your accountant, because I'm not an accountant. But yeah, if this is the business she's in, and this is the training she's taking to teach her how to keep her up to date with the current work that she's doing, it's supposed to be deductible. So.
Okay. And Kathy says she puts it under continuing all Now, are all these are deductible, right? They're just in different categories. Or all these are potentially deductible or not?
Yeah. If it's on the Schedule C, it's deductible.
Okay. That's what I was asking. Yay.
Yeah.
All right, cool.
Yep.
So Eva's asking, what about the yearly virtual expert certification fee?
Yep, you could put that under licenses and taxes and licenses here.
Because that is a license that I am granting you each year. That's what my lawyer told me. That's a license I'm giving you each year. Kathy, you said continuing ed. No, Brenda did. So Brenda, where do
Yeah.
you put continuing ed? Yeah, Brenda's saying she would put it under other, continuing ed. But again, you don't want to put a whole lot under other, so be careful with that.
You can, if you make a list and provide a separate schedule that lists all that other, that's fine.
Okay, so make it up yourself and
page.
put it under there.
That would be just an extra page on your tax return, and it would just itemize all the other.
Okay.
Here, other. There's a whole section on the second page of the Schedule C where you list your others.
Robin asks, could you explain if we need to list any expenses under utilities for our at-home business?
Yes, if you have, like, I know a guy who is an electrician, and he has a separate building where he keeps all of his supplies and he does his work. So all the utilities for that building are separate and they're business expense. For you, if you're just using a room in your house, if you have a space in your house that is solely used for business, and there's some criteria you have to look up and answer the questions and everything, then to heat that room, to air condition that room, to light that room, those are deductible expenses. So you have to calculate what percentage of your house is being used for business, and then you can take that percentage of your utilities and count it as business expense. And TurboTax is really good at helping you figure that out. If you want to use TurboTax, I recommend it. Basically, you figure out the percentage. Say your house is 10%, your office is 10% of your house. Then you can take 10% of your whole utilities for your whole house and deduct it. But you have to be careful because you can't go into your office and play card games on your computer. So it has to be legitimate, you know. So yes, you can use utilities. If you buy a space heater to put under your desk, that could count as an office expense, or it could count as a utility, just the buying of it. It just depends. But yes, did that answer your question, Robin? Okay.
And Joyce asks, where do you say we should list our web hosting?
It depends how you think about it. If your web is your advertising mechanism, you could put it under advertising. Or you could put it under legal and professional services because you're buying a service. It's not what the IRS generally considers, but you can put it there, or you can put it under office expense or other. Depends on how you think about it and how you use your website.
So you guys, I love how interested you are in this. I love how clear you're trying to get on it. This is awesome. So Susie, I'll keep track of questions as they come in and ask.
Okay. So once you have your categories defined, you must start using them for them to be useful. So here's a homework assignment. Look at your inbox and categorize your next transactions using your new categories. Also, take a look at the last 10 transactions you may have already recorded and categorize them using your new categories. In preparation for that homework assignment, I have 3 examples to go over with you now. If the system you're using for bookkeeping is electronic, the categorizing, recording, and filing may all happen at once. But I'm going to start with a simple paper bookkeeping system so you get the idea and can see all the parts. If you have paper receipts, write the category on it. And if it pertains to a specific client, write the client's name on the piece of paper. So here are my 3 examples. The first is a receipt for a payment received from a client. I noted the category as Expert VA, and since my merchant service vendor deducted a transaction fee, as we were talking about, that amount actually paid to me by my merchant service vendor was not the same as the amount the client paid. So I jotted down the transaction fee and the net amount of the payment. That's how much the client paid, and that's how much I actually got. The next receipt is a Microsoft Office 365 receipt. I wrote Schedule C and office expenses. And then since it's very busy format, I also circled the date, the product, and the amount so that I could find them easier. And the last example is a receipt for an expense. And I've noted C, and that I'm going to put it under L&P, legal and professional, because it's my Harvest subscription. Now, if you plan to handle electronic versions only, you'll actually skip this step, as you'll actually enter this information directly into your chosen bookkeeping system and quote-unquote file the receipt by saving it as a PDF with an appropriate file name. I'll talk more about file names later. Once you have the item categorized, it gets recorded and then filed. On paper, you have written the category on the page, so now you have to record it. Working with a paper bookkeeping system, you would have a ledger, something like a complicated checkbook. You might actually want to have a ledger in any case, just to record all pieces of paper. It would be called a general ledger. It would be a simple list of all the pieces of paper recording transactions. You could file a copy in the front of your file cabinet as a sort of table of contents. In your ledger, you'll record the date of the transaction, the type of transaction, the payee, the amount, the account you paid it from or deposited it to, and the category and a brief description if necessary. Here's what it would look like if you recorded these 3 transactions either in a general ledger or in an Excel spreadsheet, which is the very simplest electronic version of recording transactions. So you have the date, the payee, the description, payment type, and then the category that you're going to put it in. And then if you've got a nice table made, then it'll automatically total all those columns. So next I have a video screen capture of the Microsoft receipt being recorded in Quicken. Now the audio on this is pre-recorded, so you might need to adjust your volume.
So here's a Quicken credit card register, so we can record our transaction. You select the date, enter the payee, the amount, a memo. This was for Office 365 annual, and I pick a business expense. It's just going to be office expense, and there's your first transaction entered, and that's how you would do it in Quicken.
Then I have a video screen capture of the client payment receipt being entered in Quicken. And again, this is another one where the audio was recorded ahead of time, so you might need to adjust your volume again.
So now let's do a payment receipt. So we'll switch to the checking account, since this went directly into my checking account, and it was on October 1st. So, and it was a deposit, so I put deposit in there, and I'm holding the client name confidential, so I'll just put client name in here, and the net amount was $66.53, and it was for the month of September, and it was fees business, so I'll select that. But I also had to pay finance charges, credit card processing charges for that, so we'll hit the split transaction. And the amount that the client actually paid was $686.75, and what I had to pay was service charges, so go into business expenses and fees and charges, service fee. So that's how I categorize it. And there's our first client payment in Quicken.
You can see there's different ways to categorize that, and I've done it 3 different ways now in just this one class. So here's what the Quicken file looks like with the 3 transactions entered. You can see the checking and credit card balances in a column on the left, and then the register that is open takes up most of the right side, and there's also a function to attach the documents to each transaction. That's this little paper clip down here. If you had scanned the paper in, then you would attach the PDF or whatever document there. And I've got another one there. There's a bigger version of it so you can see it better. This is Quicken Home, Business, and Rental Property. Now let's take a look at FreshBooks dashboard. We'll be using the Create New option in the upper right corner over here. And here is a video screen capture of the Microsoft receipt being added to FreshBooks. Again, you might need to adjust the volume.
So here's our FreshBooks dashboard, and we're going to add that Microsoft receipt. So you're going to create a new expense, choose a category. These are all categories that FreshBooks has created for us. We can go through and delete all the ones we're not going to use. But right now I'm just going to put this down as an OpEx expense. And then the vendor, we can either add a vendor by typing it in right here, or since I've already put it in, you can use Microsoft. And then it was $69.99. And we can also select the file and upload it to save it. And then we have to wait for that to finish uploading before we actually save the transaction. Save. And you've got an expense listed, and you see that a couple times now. So that's how you do it in FreshBooks.
Okay, so now we have created categories, used them to categorize a few transactions, and recorded those transactions. The next step is to file the transactions. Here's a tip. If you're actually receiving checks from clients, remember to take a copy of each check before you deposit it. You can even get an app for your phone that will take a picture and deposit it electronically. Check with your bank to see if they provide this service. Now, you could scan the piece of paper in and file it electronically, or you could devise a filing system for paper documents. The filing system could be as simple as an alphabetical sorter, and you could place file items by payee. That's this right here. Another option is a date sorter, where during the course of the month, you put the month's receipts in the slot for the day of the month, and then at the end of the month, you move them to the month. And then at the end of the year, you put them all together into a manila folder. Or you could use a file folder system broken down by categories. If you want to go paperless, you'd scan or photograph the papers in and attach them to the entry in your bookkeeping system. Since you do want to be able to find your records, you'll need to devise a naming system for electronic files. I recommend starting with the year, month, and day, followed by who the party is and what type of transaction it was. So here's what our file names would look like for our 3 example transactions. 2018-1001 for client name Harvest Payment, 2018-1003 Microsoft Office Receipt, 2018-0824 Harvest Subscription Receipt. Notice that by using this date structure, all of your documents will be listed in chronological order and sorted by client or vendor. It's kind of a handy little trick there. Your physical file system could look a lot like a tax return, since that is a big consideration for having it. Thus, your labels for your manila file folders could be Schedule C Fees, Schedule C Advertising and Marketing, Schedule C Insurance, etc. You won't need to look at the paper again unless you have a question about the transaction, like you need to return something or you get audited and need to provide copies to the tax authority. So your filing system does not need to be complicated. As you have seen, you could just put all the receipts in a chronological order in a file. As you saw, during the process of recording the transaction, you assigned a category to each transaction. Note that for this to work, you must use the date on the receipt as the date of the transaction in your bookkeeping system. This process of recording the transactions with categories will facilitate the creation of reports. You are either recording transactions in detailed ledgers or spreadsheets and can thus add up columns, or the software bookkeeping system itself will keep track of how much you spend on each category. These reports are sometimes referred to as financial statements. So a statement is just a declaration of something believed to be true. So a financial statement is simply a declaration of what is believed to be true about a business, stated in monetary terms. Financial statements usually are made at a specific time, like the end of the month, or about a period of time, like a year, month, week, etc. Well-kept ledgers detailing income and expenses will help you create reports to help you analyze the success of your business, apply for loans, support tax returns, and plan the growth of your business. Remember our paper example? A report would be a simple matter of adding up the columns, Here's how we get from our paper ledger to a very simple report about our income. This is the ledger that we had. We could add up the columns and then write a report. This is called an income statement. The very simplest path to automation is to use a spreadsheet. Once set up, the spreadsheet software will automatically add up the columns and help you create reports. You can see the beginnings of reports with this simple spreadsheet. You can see the totals for each category and the resulting net income or loss. Two primary statements of use to virtual experts are the balance sheet and the income statement. The income statement, also known as a profit and loss summary or a statement of income and expenses, shows the results of business operations, summarizing the revenues and expenses for a period of time and the resulting income, net income or loss. Here's an example created from our sample transactions. It nicely shows that for the month to date, your income exceeded your expenses by $466.94. That was just our one fee and our two expenses. Here is an example income statement with a bit more data in it. You can use this report to make some conclusions about the day-to-day operations of the business. For instance, the business pays less than 1.5% of their total fee income in payment processing fees. And since this is a cash basis report, all of the fee income has been collected. The business bought some piece of equipment, depreciable equipment, last year that they will have to depreciate. They are paying a lot for legal and professional services compared to the rest of their expenses. $2,300 compared to $194.39. So that's a big expense. So that might be somewhere that they might want to look at. They don't have a lot of mail, $13.60 for postage. And they don't have a second phone line. They only paid $20 for the telephone last year. So that's just some useful information that you can get from that report. The balance sheet, also called a statement of financial position, describes the status of a business on a particular date, namely the assets, liabilities, and capital that were involved in earning the revenue shown in the income statement. In other words, it shows a summary of the types and amounts of property that the business owns and the amounts owed to creditors on a specific date. Our very simple example yields a very simple balance sheet. Assets consist entirely of cash, and the only liability is the credit card. The difference between the two is the value of the business, or the investment or equity the owner has in the business. Equity. Here is an example of a balance sheet from a sample company on QuickBooks Online. And here's a more detailed version. As you can see, there are a lot of information on the status of the business that can be observed from this report. And now I've got a blow up for you here so you can see it a little better. They have money owed to them by clients. They have more money owed to them by clients than they have in the bank. Accounts receivable is $5,000. They have $3,900 in the bank. They have a truck that they have used in their business, and it appears to be paid for since there's no liability for the loan. Truck, original cost. And I don't see it listed as a loan down here, so they must have paid for it already. They have enough cash in their bank account to pay their current bills. $3,900 in the bank, and accounts payable is $1,900.
I want that bank account. So this is a good time to ask questions again. There's nobody asked any questions recently, so we're doing good on that.
Okay, great.
But let's see if anybody has any. Anybody have any? No? Doing good? Robin said, you're doing an amazing job today, Susie. I'm proud of you, is what she wrote. Okay, doesn't seem like we have any questions.
All right. Okay, so now that we have seen that if you record every transaction and categorize it, you can create useful reports. These reports will help you to know how much money you have and where it is coming from. As we saw, your balance sheet would show you your bank balances and your credit card balances, and because you categorized each transaction, your income statement would show you where the money came from. Reports will allow you to keep on top of your client accounts and get paid regularly. If you look at your reports regularly, you will be able to determine what services you performed for which clients and when they paid you or not. Reports will help you create strategies to improve your cash flows and build your business. You can't do this if you're not creating and looking at your reports regularly. By looking at your income statement, you will see that you are paying so much interest on such and such a loan, and this awareness will enable you to plan. With reports, you can maximize your deductions to save taxes. Only by keeping track and recording all income and expense transactions will you be able to reduce your taxes. If you forget to record a receipt for an expense, it will not be deducted. A good bookkeeping system and the reports it allows will help you to be prepared in case of an audit. Having an efficient categorizing, recording, and reporting system not only makes it providing the information to the tax authorities a piece of cake, but it also shows them that you're serious. Comprehensive reports provide the necessary information to get a loan. If you can show that you are diligent in keeping track of your income and expenses and have the reports to illustrate your position, your banker will be much more inclined to take you seriously. Now that I have hopefully convinced you of the importance of a good bookkeeping system and shown you that it is something you can certainly do, I would like to share some resources so that you can get started. First are some examples of bookkeeping systems, from basic paper tracking through basic spreadsheets to dedicated software programs to virtual experts. Then a short list of online resources. You may be familiar with some of these paper bookkeeping systems, which include Dome Bookkeeping Record Books, Business Check Journal Register, OneWrite Journal and Ledgers. My mom used that in her doctor's office in the 80s. Accounting Ledger Sheets, Columnar Pads. These are the paper bookkeeping systems that we're most familiar with. They are anachronistic, but they're perfectly doable. Here is a sample of the gazillion, Kathy and I counted them, bookkeeping and accounting software and online services that are available. Excel, Mint, FreshBooks, Quicken, Wave, QuickBooks are the most popular.
That is a lot of them. And you never know how many more they're gonna use. Which one do you use, Susie? What do you use?
I use Quicken. Quicken Home Business and Rental Property is what I use. They have different levels, and that's the most complicated level that they sell.
So can you narrow it down for us and make some recommendations, please?
Sure.
Thank you.
I have taken a look at 4 of the most popular bookkeeping systems, and we'll tell you a little bit about each of them and how they differ from each other. The first on my list is FreshBooks. FreshBooks is an invoicing system for small business. It's not a comprehensive accounting system, but they're continuously working to add features. It is a web application with a companion mobile app. I found it easy to use, straightforward, and with basic terminology. It includes time tracking and allows for many integrations with other useful platforms. One nice feature is its project management tools, if you have a use for that. At the time of my research, the cost ranged from $13 to $50 a month, depending on the features you need and whether you're willing to pay for a year in advance. Here's a video screen capture to show you a little of the FreshBook interface. I'm going to be talking along with it. I did not record myself when I recorded this video screen capture, so I'll be talking along with it, so I'll try to stay in link with the video.
This is like a fun game. Watch Susie do this.
Starts with the dashboard with outstanding revenue and total profit, followed by revenue streams and the spending summary. You can keep track of time, whether you've billed for it, and then you have a bunch of reports it'll generate. On the dashboard, you can create new invoices, clients, estimates, and enter new expenses and other income. You can invite people to work in your account with different levels of accessibility. And then there's some basic screens on the left, invoices, where you create your invoices and you can see a summary of what you've got overdue or outstanding. Then there's the client section, where you can set up the client information and get quick reports on outstanding client revenue and automatically import clients from other programs, like your other address books, basically. Then there's an expense section where you can set up categories to organize your expenses and connect to your bank accounts. Then they have a chart of accounts, which is basically your list of categories. The next example I have is Wave. It's a free online accounting platform. It's more of an accounting system than FreshBooks, implementing accrual-based accounting. It's a web application and it has a corresponding mobile app. I found it easy to use and with a bit more technical terminology. With Wave, you can enter both personal and business transactions, so this might be a nice feature for some of us. It also has some payment integrations and is constantly being updated. It's also free. Did I say that? So here is a video screen capture showing the interface of Wave. Again, I'm going to be talking along with it. It starts with the dashboard with the cash flow chart and a list of things you can do, followed by a profit and loss bar chart, a summary of your accounts receivable and payable, your net income for the year to date compared to last year, and a breakdown of your expenses. You can create new invoices, estimates, recurring invoices, bills, customers, vendors, and products or services. Then you can open up the menu and get more details on each of these items. In the sales, you can see where you have your estimates, invoices, payments, customer statements, customers. And then you have purchases where you can enter bills, receipts, define your vendors, and enter products and services that you buy routinely. In accounting, you have your transactions where you can just list them all, and your chart of accounts, and you can do bank reconciliations. And then you can also connect your bank directly and download transactions. And then there's a reporting section with a lot of predefined useful reports. Profit and loss, balance sheet, cash flow. That's another useful report. Aging reports for your receivables. You can just get a list of your account balances. So there's a summary, quick look at Wave. Now for something a little different. We have Quicken Home and Business, which is a desktop bookkeeping package. I personally use Quicken mainly because I've been using it for more than 20 years. It's not a rigorous accounting system, but more of a super duper full bells and whistles set of checkbooks linked together to create reports. It's, like I said, a desktop application with a mobile app and a cloud backup. It can handle personal and business transactions. The user interface is fairly old-fashioned. It's less wizardy, for lack of a better term. You're constantly in the details, not separated by a pretty user interface. It's light on integrations, mostly just allowing you to download bank and credit card statements, transactions. You buy the software and upgrade each year as you desire. So it costs about $6 or $7 a month. This is an audio pre-recorded, so you can adjust the volume if you need to.
Here's a video screen capture showing some of the user interface of Quicken Home and Business and rental property. There are a series of options across the top. You can pick which ones you want to see up here. Since this is personal and business, You want to always use the business section for when you do business transactions. This bills would be for personal bills. So let's go into business. You can see some of the transactions that we entered here. You have some options here, tools, where you can set up projects, estimates, and invoices. You can look at your business accounts, your credit card and your checking account. You can set up customers, invoices and estimates, and bills and vendors. You can create invoices. You can receive payments from your clients, and you can make payments to vendors all on this one screen. You can do your home bills too. So you see it's quite a different interface from previous ones we've looked at. You can look at your actual check registers. These are the transactions we put in earlier in the checking account. And then in the credit card, there's the 2 transactions we put in earlier. And then there's a whole reporting section. It's the business reporting section with lots of useful reports, net worth and balances section. If you just want to get a handle on some transactions, you can do transaction reports, reconciliation reports, cash flow reports. If you want to, they've got a whole section of easy answer reports. You want to find out how much you pay to a certain vendor or customer. You can just click that there and it'll just pull them all up for the period that you specify. The transaction we put in was in last year, so there you go. A lot of manipulation tools to help you keep track of what's going on in your business.
Okay, now my final example is QuickBooks, which has a desktop version and an online version. I've not used the desktop version recently. For this class, I looked at QuickBooks Online. This is a for real double entry accounting system based on Generally Accepted Accounting Practices, or GAAP. This is what you learned in your accounting classes brought to the 21st century. QuickBooks Online is a robust accounting platform. It includes a desktop app and a mobile app and is for business transactions only. Some versions include time tracking. QuickBooks allows for many integrations with other business platforms. The desktop version works out to about $18 a month. The online version varies from about $20 a month to $75 a month, depending on the version you get. Most of us would be quite satisfied with the $20 a month version. So finally, here is a video screen capture with no audio, so I'll be talking along with it, of the user interface for QuickBooks Online. Again, we start with a dashboard. This is a sample company at QuickBooks Online. The dashboard has the most important actions, invoicing, followed by snapshots of your invoices, bank accounts, expenses, profit and loss, and sales. On the side, you can work with various attributes, expenses, sales, and banking. So that's where your invoices and customers are. You can connect to your banks. You list expenses and vendors. In the expense page is a list of all your transactions which you can manipulate. And if you go into the vendor section, it'll show you a summary of your vendors with a bunch of useful information right in the middle, including the fact that this company has 1 purchase order outstanding, 4 overdue, 5 open bills, and 21 paid accounts. So this is QuickBooks Online. Any of these is a very good choice for a virtual expert. If you're on a tight budget, Wave is your best bet as it's free. If you want a robust accounting package to cover all bases for an expanding entrepreneurial enterprise, then start with QuickBooks Simple Start, and you can upgrade as you grow. If you want personal assistance with your bookkeeping, we have virtual experts who can help. I am, of course, happy to help you with your bookkeeping needs, including providing advice on strategies, setting up your bookkeeping system, and doing your day-to-day bookkeeping. You can also find others in our directory. Oops.
Our lovely directory, yes. So is now a good time for more questions? Because we have a couple of them.
Yeah, sure.
Okay. Susan asked, what about QuickBooks?
If you're the only one doing your books, then the desktop version would be fine. But if you need to share your books with somebody like your accountant or somebody, then you might want to do the online version.
And Sharon asked, what is the difference between an owner investment and owner's equity?
Well, it's basically the same thing. And again, I'm not an accountant, but owner investment and owner equity is just two different ways to say the same thing, I think. That just means money that the owner has put into the business. So if you work, like say you worked for 10 hours and you billed somebody for that money, and then they paid you. So now you've received some money from them, and so now you have that money in the account, and that basically becomes equity, your equity in the account, because that's work that you put into it. So it doesn't have to be money, just money, but it's the difference between your assets and your liabilities is your equity. So that's a more technical term for it.
Yeah, I Googled it, and guess what? It's exactly what you said.
And I use Wave, and that's where it kind of gets a little confusing because I have my business account, and of course, anything that I, spend out of the account that is not business related, I do it as an owner draw. That's how I categorize it. And then anything that if I transfer money from my personal account to cover an expense or something, then I also list it as an owner investment, which it's all,
right.
It has two categories. It says owner investment / draw, and then there's owner's equity. So it's just so literally anything that I spend for personal is on there, and anything that I personally put in is listed under that same thing. It's just a plus and a minus.
Right. So this in Wave, what the difference between what you're saying is some of it is actual cash transfers, and some of it is just the result of the doing of business, and that's where the equity comes in. So
so anything personal would be an owner investment.
Right.
Okay.
Yeah.
Okay. It cleared. I've been avoiding this because it's so confusing. I'm ready to just start doing paper rather than doing everything electronically because I understand paper.
Yeah.
All right. Thanks.
Thank you, Susie. And thanks for the question, Sharon. So Mary says, I use QuickBooks and love it. It works great with my accountant. Easy to send her my check, register / reports, and poof, taxes are close to be completed. Cool.
Great. Yeah, a lot of accountants like it when people use QuickBooks because you can just add them as a person on there, and they can just go in and grab all your stuff, and it's already basically done all their work for them.
Right. So that's all the questions for right now.
So the next thing you'll find on the resources sheet is a list of online resources that I thought were useful. There's some tutorials, there's a list of IRS publications and forms, and some comparisons I found and reviews. And I'll just summarize some of those resources. These are two basic bookkeeping tutorials that I found that were very good. And then there's an interesting article if you're not convinced yet why you need accurate bookkeeping. Then this is the list of IRS publications that I found to be most relevant to us. And then I also have on there, I didn't list them in the slide, but you'll find a list. There's probably a dozen different reviews and comparisons comparing the 4 packages that I talked about, so you can get an idea of the differences between them. So hopefully you now have a good idea of the importance of a good bookkeeping system. With the information I've provided you today, you should be able to get a good start on setting up your bookkeeping system, including creating categories that are useful to you, yet don't deviate too far from what your tax authority expects, deciding which bookkeeping system will work best for you, and then setting it up, getting it done, and creating useful reports to keep your business on track and growing. Thank you.
Yay! Round of applause for Susie. Woo! Anybody else have any questions or comments for Susie? Susie, people are congratulating you. Wow, I am blown away, Mary says. Jan says, thank you, Susie. I say, thank you, Susie. I love how in-depth it was. I love how you were able to answer the questions. You know, because that's what we want, right? We want that specific knowledge, that specific information. So Joanna says, thank you, Susie, so helpful. Marie, this was super helpful. Eva, thank you, Susie, you are awesome. Joyce, makes me want to drop my spreadsheet and get QuickBooks. Susan, yeah, your accountant will definitely appreciate it. Susan says, very helpful, thank you. The benefits are great. And, you know, again, we've got Susie in our group. If you want her to actually work for you as a bookkeeper, she also has that availability. So any last questions or comments before we end? Because we are right at time. Susie, you did it, even with all those questions. Look at you. Yay. You're a superstar. You know, how many times I've been training for 10 years and I don't get this close on time. All right. Well, bye, everybody. Thank you, Susie.
Yep. Bye-bye.